You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Old trading walks into a bar. New trading raises it. Unlike some guys, tastytrade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, tastytrade's got the most advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named tastytrade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/ride with us and see for yourself. tastytrade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music means we are back. It is Education Wednesday. Yet again, time to roll out another episode of Options Boot Camp, what the cool kids call OBC. My name, of course, Mark Longo from the optionsinsider.com, as well as from the network upon which all of you folks have been binging and mainlining a shortened, a truncated holiday week this week, listeners. So no option block, no crypto rundown on Monday. Don't blame us. Blame the market gods at the end of the day. But we're back here ready to rock with a little bit of the old OBC today. And of course, if you're ready to rock with some more additional content beyond just what you're getting over here on the network, which I get it, it's a fire hose, it's a lot. But if you're ready to take that next step, head on over to the pro, theoptionsinsider.com/pro. Welcome to all the new folks who've been joining us so far in the new year. We had an awesome pro Q&A just yesterday, and of course, continuing the fun a little bit later this week with Options Oddities. You get the, of course, live access to come in and heckle Dan on the show, which is always fun. That's worth the price of admission right there. Plus, of course, we're coming up on the February Pro Trading Crate. Not that much longer, listeners, and you folks get to clean me out again of some stuff that's hidden deep in the recesses of our vault only for our pro members. Head on over there, theoptionsinsider.com/pro. You get the podcast feed. You get everything else you got lined up over there. Nearly 500 episodes waiting for you the second you hit that join button. So prepare yourself. It's a good time over there. And speaking of good times, we're going to have a good time on the show today. Joining me once again, my compatriot, my partner in all things options crime, none other than the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. What the cool kids call to Mr. P, welcome back to the show, sir. How goes your Wednesday?
Oh, man, my Wednesday is spectacular, Mark. Going pretty darn good. Yeah. Hope everything is good in everyone else's world as well.
I will say we survived the massive blizzard of last week, only to swap it for sub-zero temperature. So it's not like we're out of the woods just yet, Mr. Dan. But we're closing in. We're closing in over there. And speaking of closing in, we're closing in on some additional fun here on the show this week, because join us. We always have fun when the tasty folks join us here on the program. They always come armed with crazy names for option strategies and all sorts of fun. And we got a newcomer joining us on the program today. He is Mike Butler, one of the show hosts over there at tastylive. Mike, welcome to Options Bootcamp, sir.
Thank you very much. Thanks for having me, guys. Yeah, things are tastier at Tasty. That's for sure.
How long have you been saving up that gem for us, sir? I like it. All right, Mike, as we are wont to do with all of our first timers here on the network, why don't you go ahead and give our listeners a little bit of your background in the world of options, as well as what it is you do day to day over there at Tasty.
Yeah, absolutely. So like you mentioned, I'm on the tastylive network. So I have a show called Options Trading Concepts Live every day from 11 a.m. Central till 12 o'clock. We broadcast it on YouTube and we engage the audience there. So if you're ever looking for some additional day-to-day stuff, you can find me there. But yeah, I've been at Tasty for over 10 years, if you can believe it. I certainly can't, but that means I've seen a lot of different stuff in the options market. I'm ultimately a self-taught options trader. I started back in 2014, and I was just manning the email chat support desk, and I pretty much learned through people asking questions. I would answer emails and chats all day, every day that engaged me in the market. I've learned all the strategies and concepts that we talk about on Tasty, and I've kind of grown from there. So yeah, outside of the show, I also do a lot of written content and edit a lot of written content. So we've got kind of our reactionary news pieces on the News and Insights tab of tastylive.com. So I'm heavily involved with that. And then also helping out on the tastytrade side of things as well with some more evergreen content stuff. But very much like you guys, just content all day, every day. It's a fun time.
10 years at Tasty. Crazy. You're a Tasty lifer.
Yes, so.
Well, you're the perfect guy to join us today because it is time to roll out the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call, the portion of the show where you folks take the reins, your questions, your comments, your insights, your pearls of wisdom. It seems like Dan and I have been digging into the mailbag a lot lately. It just keeps refilling. You folks are insatiable out there. So, hey, the more the merrier. Like I mentioned at the top of the show, it was a truncated holiday week, so no official question of the week this week. Instead, we're going to look back at a couple of our recent polls, including looking back at what you folks thought you were going to be doing in the options market last year. We'll get to all that in a second. First, let's pay off what you folks were thinking last week. We had a fun and contentious debate about everybody's favorite, maybe least favorite AI name out there. Of course, Palantir, ticker symbol PLTR. And we asked you folks last week, hey, the PE in Palantir north of 600. I don't even know what it is today. This was of last week. Could be far more by now. We said at that level, you don't have to be a strict market fundamentalist to ask the question, do the magical letters of AI, do they trump the other two letters known as PE in the modern market? We gave you 4 choices for your answer. You said, yes, you agree AI does trump PE. Or you know what? You're a bit of an old school fundamentalist. You think PE trumps AI, or you say, who cares if it goes up? Or are you perhaps a little contrarian? Maybe you think it's time to buy some Palantir puts. And that's exactly what you folks thought, but not by a large margin. Slightly more than a third. 34.5% of you said you think it's time to buy some Palantir puts. Second place, we had 27.3% saying AI, it trumps PE, at least right now in this market. 21.8% saying PE still wins. And 16.4% of you say, who cares if it goes up out there? Dan, we were talking about this on the show last week. I forgot which category you leaned into, but are you surprised that our audience wants to fade the hell out of Palantir, sir, with some puts?
Yeah, no, I'm not terribly surprised, to tell you the truth. It's just got a massive high PE ratio. I mean, The market does sort of get ahead of things and price in what they perceive to be future earnings. So, I mean, just because something has a high P ratio doesn't mean it's not warranted. But, man, I get a little bit of a nosebleed from that one.
Yeah, in case you're wondering right now, listeners, that Palantir PE is up to a whopping 653. Although I did love this response from one of our listeners out there. No more to the party. He says, normally I'd say PE has to mean something, but then I look at Carvana. And yeah, if you look at Carvana, listeners, it's something north of 28,000. So from that perspective, Palantir is downright cheap. But Mike, I'm sure you've gotten a question or two over there at Tasty over the last year about Palantir. What are your thoughts about our poll and the fact that our audience, at least for right now, more than a third of them want to buy some puts, or they want to fade it?
Yeah, I mean, it feels wrong in this up-only market, but I kind of like the idea if you're trying to take a stab at some downside delta, especially because Palantir has had such a crazy run-up, but it hasn't necessarily been paired with a crazy implied volatility increase. When you look at something like Carvana or even HIMS is the crazy mover today, but HIMS has upwards of 100% implied volatility across all expirations I'm looking at, where at least with Palantir, you're still in the 60s, some high 70s, somewhere. But I mean, if you're looking to buy puts maybe in April, May, or further than that, they're not that expensive to get some downside delta and define your risk. So I don't actually hate it.
Of course, if you did this, listeners, this poll went out a week ago. In the last 5 days, Palantir is up another 13 handles, or 12%. So it continues to rally north in spite of the fact that our audience wants to fade the hell out of it. Let's go back a year, though. Let's go back a little bit, listener. Like we said, it is a truncated holiday week, a fun time to look back. This time, a little over a year, I think it was January of last year, we asked this question. We said, it's a new trading year. Which option strategy do you anticipate using the most throughout 2024? We all know what a wild year 2024 turned out to be, listeners. We gave you 4 choices, long premium route, long calls, long puts, or long verticals. Or then we went to the short premium route, so covered calls, short puts, or selling verticals. Or you want to go the Dan route of straddles and strangles and butterflies, or you're more of a calendar or diagonal fan. And looks like nearly 40% of you, 39.5%, said last year was going to be the year you're going to buy some premium. You wanted to buy calls, you wanted to buy puts, easy for me to say, or you wanted to buy verticals out there. Followed by number 2, covered calls, short puts, and verticals. So you want to harvest some premium, 31.6%. Straddles, strangles, and flies, 21.1%. And calendars and diagonals, bringing up the rear, only about 7.9%. Let's flip it around. Mike, we'll start with you, sir. What are your thoughts on last year being the year to buy some premium, and how do you think that worked out for our listeners?
Well, if your listeners were buying calls, I'm sure it was great. There's not many things that went the opposite direction in the tech space, at least, but I really like calendars and diagonals, specifically diagonal spreads. So I'm in that 7.9% bucket, actually. But when you look at the implied volatility structure in a lot of these products, we're seeing a lot of these products move to a pretty strong degree, but the longer term cycles aren't necessarily pricing in that same implied volatility boost as the near term cycles. So like talking about Palantir, with the 120 strike in April, you can see the premium's about 950. The 120 strike in March, the premium's only 650. So you can see there's twice the amount of time, but it's not twice the amount of premium in the March cycle. So yeah, I kind of like diagonal spreads in a way where you can define your risk, pick up that delta in a defined risk way, and still reduce cost basis with some high implied volatility boosts.
I like it. Mr. Dan, same question for you, sir. What are your thoughts on our audience loading up on the premium last year? How do you think it worked out for them, sir?
Well, yeah, I mean, statistically, it was a better year to load up on premium than it has since I can remember, maybe since 1987, just because premium has been cheaper than it statistically has been. That risk premium that we talk about every now and then, it's shrunk. I don't know if it's totally gone, but it's certainly shrunk. So if you were selective, it probably worked out pretty darn good.
Yeah, obviously it depends what kind of premium you were buying, listeners. If you were straight fading the market all year, loading up on puts and put spreads, then maybe it wasn't the best year. But as Mike said, if you were loading up on some upside, especially in some of these explosive AI names that were leading us north, then probably had a pretty decent year. Let's get out to some of your specific questions, listeners. Let's start off here with 10976. That's an interesting handle. He says, Mark and Dan, you guys rule. Oh, thank you. Right back at you. 10976. He says, the true OGs in options education. Well, thank you for that, Mr. 10976. He says, would be honored if you'd answer my question on options bootcamp. And his question is, I saw that Schwab is rolling out 24/7 stock trading to most of its accounts. I'm lukewarm on this idea, so I thought I'd ask the pros. What do you guys think about stocks and eventually options going 24/7? Yeah, this is an interesting one, 10976, and a very timely question. As you point out there, it does seem to be all the rage these days. You know, when I went down to the OIC conference last year, we got a chance to catch up with all of the, movers and shakers in the world of options, the brokerage heads, the heads of the exchanges, the heads of the trading firms, and kind of get their pulse on a lot of the big issues. And this is one that was still divisive in a lot of ways out here. I don't think a lot of the trading firms and market makers certainly were very giddy about the prospect of going 24/7. The exchanges, though, were pretty giddy because they see this as a way to obviously entice a lot of foreign capital into these markets. All these exchanges, at the end of the day, of course, are for-profit public companies now. So if they see a chance to entice some more trading volume from Europe or Asia, they're going to jump on it. And brokers, I would say, were kind of mixed. Some brokers we don't really want to staff up and spend the time and resources for what's going to be a pretty thin market session. Others, as you point out, like Schwab, are kind of going all guns blazing on all things 24/7. So it's a very mixed and interesting thing. Mike, we'll start with you as our duly appointed broker representative on the show here today. What are your thoughts on 24/7, and what are you folks over there at Tasty doing in the midst of all this 24/7 craze?
Yeah, I think it's an interesting and exciting time for a lot of people, and I think you nailed it. I think the international crowd would really love it. I was in Japan earlier this year, and my friends are like, "Did you even look at the markets once?" I'm like, "Not really, because the time frame is just so wild. You basically have to flip your hours." But yeah, I think it's always going to come down to liquidity. So the 24/7 stock trading, I could see happening across the board, just because anyone trading stock, you have penny-wide bid-ask spreads for the most part. With the options world, though, 24/7 equities or 24/7 indices, I think it's probably going to be concentrated around those big names, simply because just like some weaker liquidity stocks that don't have a lot of volume, you also don't see a lot of expiry. You also don't see a lot of strike availability. So it's pretty limited because there's a lack of activity there. But your Apples, your SPYs, the high, super high volume, especially options volume products, I think you could see those go 24/7 without too much of a hitch. But I think it would be limited in the options world to start, and maybe much more broad in the stock world.
Dan, you and I have discussed this before, sir, but it's obviously hot yet again. What are your thoughts, as 10976 puts it? He's lukewarm on the idea, but he wants to know what we think about stocks and eventually options going 24/7.
Yeah, I mean, like a big company like Schwab can do that because they have economies of scale. They can. It costs them the same as it would cost any other company to roll it out, but they capture so much more of the business. So, I mean, I don't know, like, good for them, but the liquidity is just really, really poor in the afternoon, overnight. So, a typical trader, it doesn't really benefit at all. Well, it doesn't benefit much. I mean, somebody could carve out a business trading at night, just styling it in and looking for edges and such like that. But as far as options go, I mean, the liquidity is already fractured among the, calls and puts and various strikes and various expirations. There's arguably too much notional value being made on markets in options relative to what's trading in the strikes. I mean, the options, I think, would just not make any sense to trade overnight. It would hurt liquidity. It would hurt option trading, I think.
Yeah, this has been a debate, obviously, for quite some time, well over a decade that I can think of, listeners, what shape it would take in the world of options here in 10906. There seems like there's some support when stocks are probably going to get there eventually. So then what form does it take in the world of options? It seems like people are leaning towards a limited pilot, maybe some of the top names, most liquid names like Mike was talking about there, your Apples, your Teslas, your Metas, your Nvidias, and maybe only even certain strikes, maybe only even around earnings periods. There's a lot of different proposals as to what shape this will take. It does seem, though, I'm kind of with you, 109-76. It does seem like it is inevitable. The exchanges see the dollar signs there, so they're going to push for it. And as you mentioned, big firms like Schwab have economies of scale. They can leverage. They have done so in the past. So I do think we're going to be seeing it. It does seem like the calls from our audience are kind of muted whenever we polled our audience in the past. And we kind of speak to a lot of the bleeding edge of the world of options. Most of them don't seem to want it. In fact, I'm looking right now at our pro members here in the pro chat. We got the queen here. She says, I don't think I like the idea of options going 24/7. Option God says that I think that it makes the markets more volatile and requires us to watch the markets way too much. Need a break. Yeah, that undersells that as well. I always say people who write in about this and who are looking for it, careful what you wish for. Just look at the crypto markets if you want a good analogy of how this will play out. If you like the notion of kind of no respite, no break, checking your phone 24/7 for your orders getting filled, and said that sounds great to you, and hey, some people that floats their boat, then just be careful what you wish for going down this road, on top of what everything Dan was saying. The liquidity is definitely going to be a concern. If you think you can't get filled in some names now, wait till you're trying to get filled at 2 a.m. So very much a careful what you wish for, but I'm kind of with you, 10976. I think the train is on that track. It's just a question of in what way, shape, or form we get there, fortunately or unfortunately, depending on, maybe it might be time to poll our audience again. We did this, I'll have to go pull up the most recent poll. I think it was about 6 months ago when we were doing all this stuff down at OIC, maybe a little longer. And our audience was overwhelmingly, I think about 75% against it. So kind of interesting. This is the audience people are kind of leaning towards, the bleeding edge of the options market, and they seem like they do not want it. All right, let's keep rolling. Let's go out to Tatsu. I like that handle, Tatsu. He says, very straightforward, where are we on stock substitution as the go-to strategy for 2025, and how do you like to set them up typically? What's interesting, we just asked last week about what someone had a question, I think, about what we think would be the go-to strategy for 2025. I don't think any of us said stock substitution, but we'll go with your premise, Tatsu, that we think stock substitution is the go-to for this year. By the way, where are we on stock substitution? We did just do an episode all about this not that long ago, Tatsu. You can go check it out in the archives. Episode 280, called appropriately enough, Another Look at Stock Substitution. That was less than a year ago. That was March 8th of 2024. So you can go check that out if you want a deeper dive into all things stock substitution. But it's an interesting question, worthy of some discussion. I know we have new listeners joining us all the time, as you are clearly one of them. Tatsu, you missed that last episode. Maybe, Mike, we'll start with you. What are your thoughts on stock substitution in general? Are you a fan? Are you not a fan? And then B, he asks, how do you like to set them up if you do like them? And then C, his tertiary question there, what do you think about it as the go-to strategy for 2025?
I think it's definitely an interesting one, especially because we're seeing volatile moves in these markets and we're seeing implied volatility stay relatively low. And I think that's pretty much the key for me. If I'm going to do a stock substitution strategy, it's got to be two of those things where I want to see a stock move in a big way, but I also want to see low implied volatility. You did mention that here at Tasty, we like to make up some crazy names for some strategies. I've got another one for you, and it's called the Zebra. So a Zebra, which we call a zero extrinsic value back ratio spread, is my favorite stock substitution strategy. And to put it simply, you buy two options in the money. Let's say you're playing to the upside. You buy two calls in the money, and then whatever total extrinsic value that is, you sell the at-the-money option that has that same value. So the idea is to create a back ratio where you're not paying extrinsic value up front, the risk graph looks very similar to like an in-the-money call or an in-the-money put to the downside, but you don't have that same extrinsic value associated with the extrinsic value cost associated with that strategy. I like to use them in shorter term timeframes because they're cheaper and you still get that 100 delta stock rental or close to it. The further out in time you go, the more it's going to cost, similar to like the margin or the buying power requirement for 100 shares of stock in a margin account. So shorter term, low IV stocks that you expect to move, I really like it. But my go-to strategy, I'm not sure I would mark it as that, but it can be a high return on capital way to participate in the potential move in the stock price. That's for sure.
You guys and gals, always good for a fun name. Last time you were on, you introduced us to jade lizards and all sorts of fun. Now we have to add the zebra to our tasty options lexicon. Go. So is that all set up in 1 month? So you're buying 2 in the money, then selling the at the money in the same month? Or is it more of a diagonal? How are you setting it up?
Yep, same month is usually how we do it. So like going back to Palantir, for example, selling the 120 and buying 2 of the 110s. So that for 30 days, $123 stock, which would normally have a notional risk of $12K, $6,000 buying power with 100 shares, you're putting up $2,300 with 0 extrinsic value cost. So if the stock doesn't move and you're right there at expiration, you don't lose any extrinsic value on that kind of setup. So that would be an example of a call zebra for Palantir, for example.
That is interesting because obviously one of the downsides we get into in a stock substitution list on that episode is, of course, you can pay some extrinsic value for that. And if the stock hangs out for the better part of the year, you're going to see that decay to mostly nothing. So a kind of interesting, Mr. Dan, what are your thoughts as stock substitution as the go-to strategy for 2025, as Tatsu puts it? And then B, what do you think about Mike's wrinkle there, the creatively named zebra?
Yeah. So I always say every option strategy has its place, right? I've said that a gazillion times on this show. And, just like a pure stock substitute strategy, which I'm thinking it means buying a leaps call, right? Is basically what I think he's asking about. Fine. Synthetically, you can look at that as being long the stock and just being long a very, very long-term put. And so if you look at it that way, which I think provides a little bit of clarity, you're kind of forced to think about all the extrinsic value that you're paying to hold that long-term position. And it's, I don't know, it decays really slowly, but it can still make up a lot of the percentage of the stock price, again, if we're thinking about it from a synthetic relationship. And the zebra is interesting. We could look at that synthetically as well, basically owning a leaps, or not a leaps call, 30-day in the money call, and then basically having a 30-day synthetic put credit spread. So basically you're kind of adding to the delta in that regard, a little bit, basically enough to get closer to 100 delta from the in the money call that you already have, and then getting rid of some of the extrinsic value. I don't know. It's an interesting one. I think last time we had Jenny on the show, she mentioned that one, and I kind of forgot about it. I'll have to rethink about that one again.
All this discussion makes me think maybe we do have to revisit stock substitution. It's been usually like to at least wait a year until we dive deep into a topic again, but there's so many different ways to carve up the onion out there that you could do multiple episodes on it. By the way, Mike, our chat is having a fun time with your zebra name. A lot of them are they're having some good fun with it, let's just say. And then we got Mr. Unlimited saying he likes to trade giraffe necks, $10 wide verticals. He's coining that name now. So you've inspired our chat to coin their own, shall we say, silly options trading name. So thanks for that, Mike.
Hey, that's what it's all about, right?
You can't have fun with it. What's the point? And you can have a lot of fun with stock substitution lists. There's so many. You just heard multiple examples of how to do it. You've heard, obviously, Brian Overby on the show many times. He likes his, what he calls the fig leaf, another kind of creatively named way to do it, which is kind of going the longer term in the money stock route, and or I should say option route, and then selling narrow dated covered calls against it. Obviously, you're not quite covered, hence the name fig leaf. So you're offsetting some of the extrinsic value that way. Another approach to doing that exact same thing. So there's a lot of different ways to carve up the onions. You know what? Maybe, I don't know, maybe it's time. Let us know if you'd be intrigued by that. Maybe it's time to just go deep again into all of the myriad ways that you can carve up the stock substitution onion. Maybe we'll have to have Mike back on to do a deeper dive into all things zebra. I like it. But we are kind of coming up against. So we got a time to get a few more of you in here. Let's go out to Xavier Hampton. This came in right before we started the show. I'm guessing, Xavier, English not your first language, but you know what? You reached out to the right show, so well done for you, sir. He said, good morning. He's very polite, too. We have such polite listeners. Good morning. My name is Xavier. Well, good morning, Xavier. I'm interested in learning about trading options. I found your podcast by Googling podcast about trade options. I'm glad we came up in that very specific search. He said, I am reaching out to see what episode to start to get an education about options trading fully. I see you have episodes dating back to 2012. Should I start there? Well, yeah, I got news for you, Xavier. We have episodes going back way farther than that. For this specific show, episode 1 was, I believe, around that time frame, 2012, 2013. So we have had a lot of listeners, especially over the last few years, come in, discover the show exactly the way you did, and then go all the way back to episode 1. In fact, we did remaster that not that long ago to make that path accessible. I mean, Dan and I have been doing this show for a while, to the point where some of the sponsors and brokers we had on those early episodes no longer exist. They've been acquired, and then those firms have been acquired, and so on and so forth over the years. So it was kind of interesting hearing episodes about a platform that no longer exists from 2013. So we went back and revamped that. So I would definitely encourage you to do that. I could see how that's daunting for a lot of you out there, and we are working on some new pathways to make just consuming the massive mountain of content that we offer to you, make it a little bit easier, a little bit more approachable for you. But you can do that, Xavier. It's easy to do. If your particular platform, I know Apple and a bunch of others, might limit you to the most recent 50 episodes. If that's the case, go to our website or grab our app. It will have it available there from episode 1. In fact, the website might be the easiest way to go. So you scroll all the way down, Options Bootcamp in our show category. You'll see the first episode. You can stream it right from there, and bam, you're off to the races. These shows are very much evergreen, so you can listen to them a decade plus later. And we look at the numbers. In fact, the last couple of years, Options Bootcamp episode 1, from all the way back in the primordial ooze days, has been one of the top episodes on the network. So a lot of folks are doing exactly what you're asking for. In fact, Xavier, I like the cut of your jib so much, and you're so polite, I'll have our producers reach out. We'll give you a little bit of a helping hand. Tell you what, we'll give you a little bit of the pro as well to smooth your transition into options. They see, write a polite letter, listeners. You get all sorts of fun responses. All right, we'll keep rolling. We'll get out of here. This just might be this gets my points for comment of the week. This comes from Liam Parker. We said to everybody, hey, no live shows on Monday. The markets were closed. And he chimed in with, I guess my only option now is to reenact the Founding Fathers debates at home with way less powdered wigs. Of course, we were off for President's Day on Monday. So, Liam, I hope you send us video. We want to see you reenacting Founders Day, the Founding Fathers debates with powdered wigs. And then you, too, can win some fabulous prizes, sir. I don't know, that just struck me as humorous. Our listeners romping around in powdered wigs, reenacting the great debates that founded our nation. All right, listeners, that music means we are coming up against it here for this episode. Mike, we kind of eased you in doing something you're pretty used to, answering a lot of listener questions already. In the meantime, if folks want to ask you more questions, where should they go? What should they do, Mike?
Yeah, thanks for having me on. You can find me on Twitter. I'm at Trader Mikey B there, or X, I guess is what the kids are calling it these days.
I will never call it X. It will always be Twitter. So hit him up over there on Twitter, listeners. If you follow us, we were tweeting about it, so you could find his handle right there. Just look for Trader Mikey B. And any particular shows or anything coming up at Tasty you want to plug, sir?
Yeah, so again, Options Trading Concepts Live is the show that I host with my good friend Nick Batista and Katie McGarrigle as well. That's every day, every market day from 11 a.m. Central to 12 p.m. Broadcast on YouTube as well. If you want to join us in the chat's always popping off. And then I'm actually hosting a NFT event in March. So that's going to be with Katie and Nick as well. You can sign up for that for free at tastylive.com/events.
NFTs, interesting. Haven't heard about that in a little bit, so kind of interesting. I'll have to check that one out, listeners. You can check it out over there. You know where to find the Tasty folks. They're pretty easy to find. And Mr. Dan, if folks want to ask you some options questions outside of the old OBC, where should they go? What should they do, sir?
Sure. Come on over to markettaker.com, and we'd love to chat with you.
There you go, markettaker.com. Don't forget the second T for Theta, listeners, the place to go to kick the tires and light the fires. We got to get on out of here for OBC, but don't worry. We're not done quite yet today. If you're hanging out in the live, just hang out. We'll be back in a little bit talking all things futures. On the Futures Rundown, we'll be joined by our good pal, Miss Carly Garner, to talk about what's lighting up the tape in the mysterious, sometimes opaque world of the underlying. You folks asked, nay, you demanded us to add a show on futures last year, and we did, and it's been a fascinating journey. You folks have been loving it, so join us in a little bit for the Futures Rundown. Of course, if you're listening after the fact, like a lot of our listeners are, just hit next on your device of choice. Yet another reason why you should be subscribed to the full network, listeners. Nearly a dozen programs coming at you over there on the full network. Of course, if you want to go above and beyond, you're going to get access to the pro Q&As. You want to get access to Options Oddities. The end of the week, I will be joined by our good fig leaf buddy, the options guy himself, Mr. Brian Overby, on a little bit of Options Oddities. You don't want the options party to end with vol views on Friday. Check out the pro, theoptionsinsider.com/pro, the place to go to learn more. Then we're back again with our usual array of content throughout the week until we're back again next Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the most advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/ride with us and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.